Hello kind people of YouTube and welcome back to another video. No video yesterday, sorry for that. My code that I thought I had defeated over the Christmas days came back with a vengeance yesterday. I'm feeling a bit better today. No guarantee that my voice will hold out until the end of this video, so if I'm coughing, if my voice starts disappearing, very sorry about that. But let's jump into these stories that I have prepared here, and let's get through them relatively quickly today, shall we? I always say that, but then I take half an hour anyways. And first up, we can see that in December, at least so far, as there are only 2 days left, Bitcoin has significantly outperformed the S&P 500 and also other ways of looking at the stock market. In December, traders' investment in the cryptocurrency market has been comparatively better than what it was on Wall Street, as demonstrated by the relative performance of the Bitcoin price and the S&P 500 index. And we see the graphic here, we see the S&P 500 falling, and we see Bitcoin in that same time period, well, starting off not really strong, but definitely a significant difference in how they have performed. After the month previously, the stock markets outperformed Bitcoin. Bitcoin underwent an impressive bullish correction after falling almost 85% from its all-time high near $20,000. The price at the beginning of December established an interim bottom level at $3,127 before jumping towards its monthly high near $4,237. That totaled its correction to almost 35.5%. The S&P 500, on the other hand, was already undergoing a downside correction after establishing its 52-week high at 2,940.91. As December kicked in, the index noted 10 back-to-back daily selling sessions during midterm, causing a crash of almost 20% from the recent peak, its lowest since April of 2017. The S&P sister indexes Dow Jones and Nasdaq also plunged significantly within the same time frame. The trio altogether came closer to record the worst monthly crash since October 2008 during the time of the financial crisis. Now we don't really need to read much more about this. The main takeaway is just the comparative development of the Bitcoin price as opposed to the S&P 500 and other metrics by which we judge the stock market, which make the cryptocurrency market relatively attractive to investors right now, with some fearing that we might be seeing the beginning of a traditional market crash, with, like it says, the worst month since October 2008. So the stock market saw their worst month in 10 years. Meanwhile, after Bitcoin had a pretty bad month in November, it actually saw a very strong December, and for once we are outperforming here. As you can see, there were previous months where we were outperforming, like this area almost certainly outperformed up here. But in general, we have either performed similarly to the stock markets or have underperformed it. So this is very, very nice. Now, of course, a fairer way to compare would be not looking at the Bitcoin price, but looking at the development of a crypto index, of which multiple do exist, or of the general market cap for the crypto markets. But Bitcoin's dominance has been pretty steady for the last month or so. So the Bitcoin price is representative of the overall markets right now, making this a fair comparison at the moment. So as it stands right now, December 2018, good for Bitcoin, good for cryptocurrency, not so good for traditional stocks, for traditional funds, just for the traditional finance market. And we might see some carryover in early 2019, with some people possibly more willing to invest in crypto over the stock market. Let's talk about Binance. They have released not so much their yearly report as their yearly letter to investors. And there's some interesting statements in there, so let's take a look. Binance has released its yearly roundup report in the form of a letter from its chief executive officer, Changpeng Zhao. The CEO informed about the company's progress and the target they set to achieve, one of which is launching Binance Mainnet in 2019, which will make the platform pull out of the Ethereum network. Binance will be following Tron, EOS and other coins that have backed out of the ERC20 network, and other coins like Zilliqa that are hoping to pull off the network completely by January next year. This is an interesting development we've seen for a while now, where a lot of projects started on top of Ethereum and have since moved away from it because of limitations, because they want to be on their own blockchain or because they want to move over to a more modern blockchain. Now, Ethereum is still an attractive place to develop, develop new tokens on top of, to develop software on top of, to develop smart contracts on top of. But it's not the most technologically advanced one on the market anymore. Its age is starting to show, and of course with Raiden and with Constantinople and with a bunch of other upgrades coming up, the Ethereum team is working on making it more attractive, on getting it up to the times. But as it stands right now, people are jumping ship, people are moving away to other blockchains, people are moving away to their own blockchains. And we've seen a lot of this, and the important thing here is that we've seen some major projects do it. Tron, EOS, those are big. Then of course Binance, keep in mind Binance Coin is also one of the top 20 by market cap performers nowadays. So this is, Ethereum is really losing, I think it's called mind space, I don't have the right term in my head right now. But Ethereum is really losing its perceived importance in the crypto world among a lot of people, and that might hurt it in the long run. Because it used to be that people thought of Ethereum as the evolution of blockchain. People looked at Ethereum and they saw progress, they saw future, they saw the most important cryptocurrency since Bitcoin. And slowly but surely that perception is turning around, where people recognize Ethereum's historic place, but it isn't quite being considered as the go-to for advanced blockchain technology anymore. That mantle has been taken by newer projects. But let's get back to the article. Talking further about Binance Chain, the CEO informed that the platform is assuming to achieve this by January 2019 with a native on-chain DEX. A testnet version of Binance Chain is made available to the platform's partners and will be available to the public within the first month of the coming year. The mainnet will be launched a few months after Binance Chain. CZ talked about the ways in which Binance Chain will make a difference, he added. The Binance Chain is unique in many ways. With 1 second block times and 1 confirmation finality, we hope it will serve a few niche functions other blockchains haven't covered. This is also something very interesting and very smart, that they're specifically going for niche functions here. Because as it stands right now, the blockchain market is becoming more and more saturated. We have over 2,000 projects out. Now a lot of them are garbage, but there are also a lot of legitimate projects among that. So at this point, if you're aiming to just become the best cryptocurrency, you are setting yourself up to fail. If you're creating a cryptocurrency at this point that is supposed to do everything, you are setting yourself up to fail, because there is so much development that has to go into that, and you have to then beat every other cryptocurrency at pretty much everything. But where there is a lot of space left, where there are a lot of niches that people can still fill, is in smaller functions that might not be covered by other blockchains at all, or that might be underwhelming in other blockchains, and that is what they're doing here. Like nowadays, if you're trying to get into the blockchain market, there are too many all-rounders already out there. You have to have something specific that you're aiming for. And that's an intelligent decision here. They're doing what needs to be done. Like we've seen with Binance, the integration of their Binance coin in the exchange itself is also absolutely genius. They're doing some very intelligent stuff with their blockchain projects. CZ educated the readers about wanting to increase BNB adoptions in the coming year and about investing in more projects. The company will also be seen participating in more transparent charities in the coming year. The CEO also stated the reasons, according to him, which led to the prices of the cryptocurrency falling so low in the year 2018. He pointed towards some ICO projects from 2017 that missed the 2018 delivery promises. The letter talked about regulatory uncertainty and how it is inhibiting the progress of the digital currency industry. CZ asked the crypto world to unite in order to increase the prices of the cryptocurrencies. The CEO wrote, "We as a young industry were not very united. There were fights between projects, between people, and stupid forks that triggered further drops in price." Can we just appreciate this statement here? Because there's so much animosity in the crypto world. Everyone seems to have 1 or 2 projects they support and they're trying to bring down all the others. That is not a space that is very conducive to growth. And in my opinion, and CZ seems to share that opinion, we should be looking out for the general growth of the crypto market, and then we will all benefit. This is not a zero-sum game. Different cryptocurrencies do different things. There's room for them to coexist. There's even room for different projects that do similar things to coexist. We don't just have one mobile phone company or one toilet paper company. So I think this is a very nice appeal that I will absolutely agree with and share myself. Be kinder to each other, work together. It's not a zero-sum game. People who support a cryptocurrency you're not particularly interested in are not your enemy. Let's work together on increasing the profile of the cryptocurrency market, and we will all benefit from that when the next bull run hits, and when all the projects that we're supporting will go up in value. We got statements from another exchange CEO, this time about Ethereum. Initial coin offerings will return within 18 months and Ethereum will rebound aggressively, BitMEX CEO Arthur Hayes told Cointelegraph Japan. BitMEX is I don't actually know how to pronounce that, Seychelles? Probably not. Based cryptocurrency trading platform that has become one of the largest trading platforms in the world by volume. Speaking in an exclusive interview, Hayes forecast a return to form for 2018's dead ICO markets. The use case for Ether is primarily ICOs, the market is dead right now, he said, adding, once there are new issues, then Ether will rebound aggressively. When the ICO market returns, Ether will quickly test $200. The timing of the ICE rebirth is 12 to 18 months out. Now, that, in general, I think he's onto something here. Because all of these planned ICOs that have been put on ice for now, they're not disappearing, they will return. At some point they will be carried out. Some of them might be moving over to other blockchains, but most of them will still happen at some point. And they're pretty much all waiting for a regulatory and a framework and a market condition where they can feel safe carrying out their ICO. So all of those are going to return. The slump that we have seen, most of that will be undone when all of these planned projects actually carry out their ICOs. What I'm not so sure about is his time frame that it's 12 to 18 months out and that only then Ether will test 200. I think we have seen Ether close to 150. It is very possible that it will test 200 in the next couple of weeks, with or without the ICO rebirth. But let's continue looking at the statements here. Hayes made the comments following a now rare days of stability across cryptocurrency markets, with Ether US dollar staying range bound within 1% of $129 after doubling in a week. One of the top performers in the short term, the once largest altcoin, has seen losses of over 90% in 2018. In the coming 12 to 18 months, however, Hayes first predicts stablecoins will have their time in the limelight before an ICO resurgence. Security tokens and stablecoins will prove attractive sirens for investors in 2019, he continued, noting, while the fundamental I can never pronounce French, raison d'être is flawed, investors in this time of pain will latch onto anything they believe will be their ticket to easy riches. He did not elaborate on whether that market will implode like that of the 2017 ICO boom. For Bitcoin, Hayes suggested a fairly small trading corridor for next year between $1,000 and $10,000. Some sources have argued institutional investors engaging in Bitcoin through new financial institutions will take the price much higher. Now, I do think he might be... He's making very conservative assessments here. And there's a point to be made for why that is a good idea. Because it's better to undershoot than to overshoot. If you overshoot, if you predict in February of 2019 Bitcoin will be $2 million US, you're just going to look like an idiot. It's better to underestimate where prices will go and then let them prove you wrong and go even higher. Now, I'm not sure why they're calling this a fairly small trading corridor. 1,000 to 10,000, that is a 10 times increase of value. That is not a small trading corridor. But I do think he might be underestimating where Bitcoin and cryptocurrency in general can go in 2019. I think we have very good reason to believe we are in for a bull market in early 2019 based off everything we know is about to happen. If we can keep the crypto prices stable until then, ideally if we can get Bitcoin closer to about 6,000 again, I think there's a very strong case to be made that with a bunch of institutional investors coming in, that with a bunch of other projects going live, that will see the price pushed above 10,000 very early in 2019. But as it stands, it's not a rational market, not completely at least. We can make sensible guesses, but in the end, better to underestimate than overestimate. Now, Bank of America has been aggressively getting blockchain patents, and they got themselves yet another one for blockchain-based ATMs, but interestingly, not crypto ATMs. Bank of America may be eyeing shared networks of ATMs powered by blockchain tech, according to a newly revealed patent application. The filing, published by the US Patent and Trademark Office on Tuesday, outlines a system via which a cash handling device could utilize blockchain technology to accelerate transaction speed and or facilitate other types of transactions, in addition to ATM transactions like cash withdrawals and deposits, such as gift registry transactions. Blockchain could also help such devices handle a relatively larger amount of transaction volume while reducing its physical cash transportation needs. And ultimately what they're doing here is this would be a system to unlink ATMs from being linked to just one bank. This would make them more accessible, would build them on top of an immutable blockchain where information can be securely stored, accessed, and exchanged, and would be able to offer a lot of new services at the ATMs. Now, why am I reading this out? This isn't cryptocurrency news, really. I'm reading this out because this is mainstream, truly mainstream blockchain adoption. And ultimately, blockchain and cryptocurrency do go hand in hand, even if you can use blockchain in a variety of ways without a cryptocurrency token. So whenever something big like Bank of America goes aggressively for blockchain, gets a bunch of new patents, uses it in interesting ways, you're gonna hear me talking about it, if only very briefly, and that is exactly what I did here, very briefly. Let's look at one final thing for this video, and then I can feel my throat closing up, so... Bitcoin Private is a complete mess. A complete mess. And I hope none of you are invested in this nonsense, but I just want to read this article because it's insane what has been going on there. With the year coming to an end, many scams surrounding the cryptocurrency world are now coming into the limelight, with many trials underway. Bitcoin Private has been surrounded by a controversy involving the creation of 2 million additional coins without disclosure in the project's white paper. So just keep that in mind. 2 million coins just appeared. This had led to many enthusiasts and investors questioning whether they were intended to exist at all. Bitcoin Private is a part of one of the many hard forks that happened in the past 2 years. It is a merged fork of Bitcoin and Z Classic, which is also a fork of Zcash. So just the mess just continues. This I didn't realize before. Bitcoin Private is a hard fork of Bitcoin and a hard fork of another coin. It is a hard fork combination of Bitcoin and an already hard fork of Zcash. So it's just getting messier and messier. The fork took place earlier this year in February after developers wanted to create a privacy-focused version of Bitcoin that borrowed elements from Zcash or Zclassic, reported CryptoPotato, which, by the way, awesome website name, CryptoPotato. Privacy-focused, but apparently 2 million coins could just be created out of nowhere. Even though hard forks happen due to real disagreements between developer communities, many have alleged that the many Bitcoin forks were just a mere trick to get money and opportunities to make money while capitalizing on the brand name Bitcoin. Honestly, anyone who denies that at this point is just delusional. 1 or 2 of those projects were legitimate, but the vast majority, they saw Bitcoin Cash. They saw that it was possible to split Bitcoin, to make a hard fork, to create a new coin, and to have a bunch of new free money after. And that's what they all did. That's why we saw Bitcoin Cash itself hard fork. Bitcoin SV is the most transparent money grab I've seen in a long time. But essentially most of these hard forks, they weren't created for any legitimate reason. The end result is usually a coin that is technologically inferior to a bunch of other cryptocurrency projects that are already out. The only reason to make them is because you hold a certain amount of Bitcoin and you figured, hey, if I hard fork this, I will have a bunch of tokens of this new coin that I can sell off for a profit with very little work. So let's be clear here, most of those projects are money-making schemes. But let's continue. This was first discovered by digital assets analytics website Coinmetrics. The site had published a report that read, 2.41 million units of altcoin Bitcoin Private, about $3.9 million at the time of discovery, were secretly minted. Bitcoin Private swiftly responded to the claims made by launching an internal investigation to verify the validity of the claim. They found that the allegation was mathematically accurate. Now, on the one hand, I want to commend them on doing this. On the other hand, if they hadn't instantly launched an internal investigation and admitted this, it would have just been an even bigger PR mess for them, so they didn't really have another choice. One of the developers, after solving an issue, merged their code with a missing line, allowing the fork mine to be exploited due to the nodes not properly verifying the falsified fork blocks. Bitcoin Private informed that the developer left at the end of the project. The bug that was introduced after merging the codes was exploited to create more than 2 million new coins when Bitcoin Private was announced. Their developer team wrote, as the code was open source and the fork mine was announced on Twitter, anyone with sufficient blockchain development knowledge could have exploited it, they added. This particular exploit could only be taken advantage of during the fork mine, which already occurred earlier this year. Therefore, it is impossible for this particular bug to exploit to occur again, nor can it be further exploited. They're kind of dancing around the issue here. The issue isn't that there was a bug that was exploited and now it's not dangerous anymore. The issue is that there was so little oversight. That there was so little oversight from the developer team that they didn't notice before releasing it. And no one in their community seems to have noticed, despite this being open source. That this massive, and they're calling it a bug, it looks more like an exploit. This sounds very much like it was put in there on purpose, either by this alleged developer who left, or even by the entire team as a way to make all of them some money, and they might just be lying about this now. They might have put it in there themselves, hoping nobody would notice, hoping they could make a bunch of extra money on the side. But I'm not claiming they're doing that here. I'm just saying that would be one possible reading of the situation. We don't know. But in general, this is whichever way you look at this is incredibly troubling, because you either have the team doing this on purpose, putting an exploit in there to make themselves some money, undermining the entire validity of their project on the as a side result, or there was so little oversight, so little care going into the release of their code that nobody noticed this. And they're saying, okay, this exploit can't be taken advantage of anymore. But if this one was missed for almost a year, how many other problems are there with the code then? Either way you look at it, this looks terrible, absolutely terrible. And they're now planning a hard fork to undo this. That hard fork will also undo the legitimately mined coins since then. So we can pretty much say Bitcoin Private is completely dead. It's a dead project. It's completely worthless. It's nonsense. And either way you look at this, between this possibly being an inside job and done on purpose, between their security obviously and their care obviously being so low that this managed to sneak through, between the possibility of there being other problems like this in the code, and now this hard fork that they're potentially planning, this is such a mess. This is such a mess. This project is dead. I mean, it was never really alive, but now it's definitely dead. And with this, I'm going to end today's video. If my voice will allow me to, I can feel it getting a bit worse over time. If my voice will allow me to, I will make at least one more video later today, because there's been so much news. I'm still catching up on stuff from the Christmas days, and there's a bunch of new news. I'll try to get it all to you guys, but it might take me a couple days to really get on top of it again, especially if my cold comes back. But as always, thank you so much for watching. If you want to read any of these articles yourselves, head to the description, there's the links to them there. If you want to support my channel, would be highly appreciated. There's donation addresses, there's a Binance affiliate code, there's a Ledger affiliate code, or you could become my Patreon subscriber, all links in the description. Or if you don't want to or can't give me any money, that is also perfectly fine. I would just ask, please leave a like and comment under this video. It incredibly helps my channel. I've noticed since I asked you guys to do this, I've gotten a lot more likes and comments. And since that has happened in the last like 2 weeks or so, my videos are getting a second peak. My videos that usually got a peak of views on the first day and then went shallow and then kind of fizzled out, now about 1 in 3 or 1 in 4 videos will get a second peak on the second day. I had never seen that before. That must be the effect of all you guys being so awesome to me, leaving all those likes and comments. It's really helping the channel. So thank you so much, and I'll see you guys hopefully sooner rather than later.